Are you ready to discover how spot Bitcoin ETFs could revolutionize the world of Bitcoin and crypto investment in 2025? This could be the breakthrough that brings institutional investors, pension funds, insurance companies, and family offices into the Bitcoin market at scale. Let's break it all down and see why everyone is talking about this game-changing development. Before we dive into the details, make sure to hit that like button and subscribe to stay up to date with the latest in blockchain and cryptocurrency trends. You don't want to miss out on future insights that could shape your investments. What is a spot Bitcoin ETF? Imagine being able to own Bitcoin without dealing with the complexities of managing a wallet or worrying about its security. A spot Bitcoin ETF makes this possible. Unlike futures Bitcoin ETFs, which track Bitcoin's price through contracts, spot Bitcoin ETFs actually hold real Bitcoin in reserve. When you buy shares of a spot ETF, you own a small piece of real Bitcoin, securely stored in institutional-grade wallets. This means you're investing in actual Bitcoin, not just the price fluctuations tied to contracts. For Bitcoin, this is a game changer. Spot ETFs provide investors with direct exposure to the real value of Bitcoin, without the risk or complication of derivatives. There's no need to deal with contracts, premium prices, or the potential for discounted value, just pure, straightforward Bitcoin. This simplicity and security makes spot Bitcoin ETFs an attractive option for both new and experienced investors who want to tap into Bitcoin's growth without the hassle of managing digital assets themselves. The long road to approval. Why did it take so long? Now you might be wondering, if spot Bitcoin ETFs are so great, why did it take so long for them to get approved? The answer is simple. Regulations. The SEC had to ensure that these products were secure, well-regulated, and capable of withstanding scrutiny. They demanded robust custody solutions, thorough audits, and insurance policies to protect investors from potential losses. And it wasn't just about security. The SEC needed proof that these ETFs wouldn't be used to manipulate the market. After years of negotiations and adjustments, major asset managers like BlackRock, Fidelity, and Grayscale finally met these rigorous standards. And in early 2025, the SEC gave the green light. This is a watershed moment for Bitcoin and crypto. It means institutions can finally access the market through a regulated, secure vehicle. A global phenomenon. Spot Bitcoin. ETFs around the world. It's not just the US that's on board with spot Bitcoin. ETFs countries around the world are embracing them too. In Europe, the MICA, Markets and Crypto Assets Framework, is already enabling pension funds to invest in spot Bitcoin ETFs. Meanwhile, Singapore and Hong Kong are leading the charge in Asia, passing legislation that makes it easier for financial institutions to invest in crypto assets. With these global approvals, we now have a clear, regulated path for institutional investors worldwide to get involved in Bitcoin. This global regulatory push is essential for Bitcoin to transition from being a niche investment to a mainstream asset class. As more regions follow suit, Bitcoin's reputation and accessibility will continue to grow, creating a more stable market for investors. Why do institutions care? If you've ever wondered why Bitcoin hasn't yet been fully embraced by traditional finance, the answer is simple. Institutions have been waiting for a secure, regulated investment vehicle. The massive capital pools of pension funds, endowments, and insurance companies have been hesitant to enter the crypto space due to regulatory uncertainty and security concerns. Spot Bitcoin ETFs change that. Now, institutions can invest in Bitcoin without having to worry about managing wallets, navigating complicated tax regulations, or dealing with the complexities of self-custody. They can simply buy into an ETF, much like they would any other stock or bond, offering a straightforward way to access Bitcoin's growth potential. Just a 0.5% allocation from a $10 trillion pension pool could inject $50 billion into the Bitcoin market. Early market impact. Institutional demand drives Bitcoin's price up. The launch of Spot Bitcoin. ETFs didn't just make headlines, it moved markets. In the weeks following the approval, these ETFs saw over $5 billion in net inflows, causing Bitcoin's price to jump by 15%. That's the kind of institutional demand that can change the trajectory of the Bitcoin market. No longer just driven by retail traders, Bitcoin is now attracting serious capital from large institutions. And this is only the beginning. For anyone who's been watching Bitcoin's price closely, it's clear that institutional money can make a huge difference. These massive inflows signal that large-scale investors are betting on Bitcoin as a long-term store of value. And their involvement is pushing Bitcoin's price to new heights. If you're finding this information helpful, don't forget to drop a comment below. Let's talk. What do you think about spot Bitcoin ETFs? Are you considering them for your portfolio? The risks and considerations. Of course, no investment is without its risks. Spot Bitcoin ETFs are not immune to the volatility that has characterized Bitcoin's history. Custody risk is one of the main concerns after all. Investors are trusting the ETF provider to keep the Bitcoin safe. Regulatory shifts could also pose challenges in the future, with government policies or tax laws potentially affecting the market. And while high inflows are exciting, they can also lead to short-term volatility. Investors should also be mindful of tracking errors, which can arise when the ETF's price diverges slightly from the actual price of Bitcoin. These small discrepancies are typically due to management fees, but they can still affect your investment. Spot versus futures ETFs. What's the difference? Let's compare spot Bitcoin ETFs to their futures-based counterparts. Spot ETFs hold actual Bitcoin, meaning they offer more direct exposure to the cryptocurrency's price. Futures ETFs, on the other hand, hold Bitcoin futures contracts, which means they're subject to pricing premiums or discounts based on market conditions. Additionally, futures ETFs require the regular rollover of contracts, which can introduce further complexities. For institutional investors looking for clean, precise exposure to Bitcoin's price, spot ETFs are the superior choice. But that doesn't mean futures ETFs were a waste of time. On the contrary, they laid the regulatory groundwork for spot ETFs to thrive. What's next? The future of crypto ETFs. So, what comes next in the world of Bitcoin ETFs? As the market grows, we can expect to see even more innovation. Retirement account Bitcoin ETFs are on the horizon, allowing people to invest in Bitcoin through their 401ks or IRAs. ESG-focused crypto funds that only invest in Bitcoin mined with renewable energy are also likely to gain traction as investors demand more sustainable investment options. Moreover, as other cryptocurrencies like Ethereum, Solana, and Cardano continue to mature, we'll likely see spot ETFs for these assets as well. The possibilities are endless, and the future of crypto ETFs is only just beginning to take shape. For retail investors, a new era of access to Bitcoin. For retail investors, spot Bitcoin ETFs open up a whole new world of opportunities. If you've been hesitant to buy Bitcoin directly, these ETFs offer a regulated, secure alternative. While you can still buy Bitcoin through exchanges and wallets, spot Bitcoin ETFs give you another option, especially if you prefer the familiarity and security of traditional financial products. As institutions continue to invest in Bitcoin through ETFs, their participation will likely lead to greater stability and less volatility in the market. This could make Bitcoin a more attractive investment for retail investors looking for long-term growth. Conclusion: the future of Bitcoin is here. Spot Bitcoin ETFs are here, and they're reshaping the landscape of cryptocurrency investment. By offering institutional investors a regulated, secure, and simple way to invest in Bitcoin, these ETFs have the potential to unlock massive amounts of capital that will drive Bitcoin's adoption and price. Whether you're an institutional investor or retail trader, this is a moment to watch closely. As we move into 2025 and beyond, spot Bitcoin ETFs are poised to play a pivotal role in the future of finance. If you found this deep dive helpful, don't forget to hit like and subscribe for more insights into the world of crypto and blockchain. Share your thoughts in the comments. Do you think spot ETFs will lead Bitcoin to new all-time highs? Let us know what you think. And as always, thanks for watching.